Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Good morning, everyone. Today is Monday, June the 23rd. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Well, if you've been reading the news, you're probably a little tense. If you want to trade, better shake that off. Okay, here's the thing. Trading requires a cool mind that is not tight, not fear-based, but prepared, right? So that's going to be my goal for us. Don't watch the news. As I said in Market Kickoff, sure, you can watch the news. Don't take it to the markets, all right? The problem is what happens is that our mind gets colored by the news that we interpret and bring inside of our personal belief system, and then it runs into the market. It creates a cognitive bias. All right, just like everybody who sold, and then got their faces ripped off because the market continued to lift. Pay attention to price. It's the only thing that reveals the true agenda. And what is that? I want to buy and sell and have a profit at the expected outcome of all my trades. Big money's doing that. Little money like us should be doing that. So let's just pay attention, okay? Pay attention to price. Understand we could have big reflexive moves, but at the end of the day, what we are looking at is something largely range-bound. Last thing I'll say that I also mentioned last night on Market Kickoff. One, you like what happened? Tell your congressmen and senators you support them. You don't like what happened? Go talk to your congressmen and senators. We are living in a democratic republic, and getting yourself wound up in big fights about your personal ideology and what you want everybody to know that you believe. Listen, it matters not. It is not going to do anything but spin you up, and you're not going to have mental control to manage the market. Okay, stepped off my soapbox. Let's move on. Opening range this morning, as we look at the E-mini S&P, it had a high of 6,007, a low of 5,959. Okay, so we're looking at about 50 points. Pretty wide, not overly dramatic. I'm trying to find where that level is. Pull it up right here. Okay, now here's what's super interesting. We are sitting at the top of the expected move on the day today, 6,009 and some change. Now, the high of the opening candlestick was above that. We spiked into the expected range, right? This is average daily range formations. Notice that's why you want to plot them here. It can tell you where relative resistance or relative support might be sitting. So here's the battleground. The traders who wanted to sell the 6,010, 6,011, they're in the hot seat right now, right? Because they're short the calls and they're thinking, whoa, this better get lower or I'm going to have to buy the instrument to shift my delta to neutral. Okay? So they are bouncing off of that level. I talked to Beth last week, Friday. I can't even remember. She's one tired trader, absolute gem. So she reached out and she said, hey, talk to me a little bit about these moving average things that you talk about in your book. Remember, I wrote that book many years ago, and in my own development, moving averages have come to mean nothing but relative ebb and flow, but without the strength of reliability that's associated with staring down price action. Staring down price action is all you need to look for. And so right now, the 8 and the 20 are sideways. I used to call those serpentine, but you can look, pull back, and let your eyes frame out the box that it's sitting in. So this box, which I am going to delete after the fact, but this box really gives us the range of the formation that tells us if we drop back into the range, we'll go through the range. And notice we dropped out of the range to the upside, went back in, went to the bottom of the range. We flew out of the bottom savagely in the opening, and we returned right in the middle of the box. What's that tell you? It tells you if you go to the top of the box and then the bottom of the box, the traders are resolving what it is that they think is happening. Last thing we want to look at, the highest volume candlestick. Remember, we look down here at the volume, not the size of the change in price, but the volume associated with the candle. And what we see is that on Friday, we had this box, much tighter than the general box, but we are now coming to the bottom of the box and holding that. So, what are most traders positioned? If you watch the news, you're headed for the bunker, right? You're looking for whatever, something horrible. But I'm telling you, one, I am a history buff, and Middle Eastern wars are very important to me to watch, also because I'm a Christian and I believe in the end times. So I have a lot of experience watching geopolitical conflict in the Middle East and seeing how price action reflects there. And I'm telling you, this is not abnormal. This is not crazy. This is not crazy. Price action tells us that. Volatility chains are compressed. Traders are just not, big traders are not getting wigged out. They're absolutely not. So that's my storyboard right there. What's the upper edge of the formation telling me today? 60-50, 60-50, very important level for us to stare down. I suspect if we get above there, then it's still off to the races to the upside. In general, we are largely landlocked. To the downside, the expected move 5,927 to 5,924. That's also Thursday's low. All right? Now, not trying to be judgy or step on anybody's toes. Honest to goodness, I'm not. I just want you to trade well. That's my only job here. Can I give you the framework that helps you make strategically good decisions? And that's all we're going to stare down. Let's take a look at the NQ. Okay, opening range for the NQ, also pretty wide. High 21,787, low 21,566. So well over 200 points. And yet we pull back into the low of, I don't know how many days ago that was. Actually, you know what? Let's use this. The high of the opening range on June 17th gave us the support zone. Remember, near-term zones are going to give us some very nice targets as we sit around those opening ranges. Moving averages aren't telling us very, very much. Okay, expected move today, 21,823 on the upside. Downside expected move, 21,485. We're dancing right on it right now. Highest volume candlestick of Friday was the 10 a.m. candle. We broke right into it. Take a look at how the Fibonacci can help you. When you've got a wide range like that, look at the 50% level, friends. I'm telling you, when you see patterns that are this consistent, they are revealing to you that the markets of big money are leaning on the math, because just like us, they don't have any idea what's going to happen. So they're going to lean into the math and let it work for them until the math breaks. And then they have to find a new pattern that they will move into. All right, so if we move above this 50% mark, 21,929, very likely that we get into 22,000, maybe 22,030. Expected move on the upside for the week, 22,148. Expected move for the downside on the week, 21,169. What is momentum? Bullish. It's above the 50%, above the zero line. But they're looking for support. What is the support I like? Look at this moving average on the 63. It's flat, flat, flat. So we move to the range. What's our job as traders? If I take the trade Where does risk tell me that I am wrong? And so for me, I don't want to take a long until it comes to the top of the opening range. And then it tells me that it's going to be okay. And then my first trade at the top of that opening range is going to send me into the implied vol move and all the other moving averages and the VWAP. And if I can't, I'll take some profit there. And if I can't get over, guess what? High, low. Lower high, lower low. Right? Here's the big move. Here's why it's a change. High, low, lower high, lower low, higher high relative to this, but still lower than this. So it tells you they're trapped and arguing. Wait for the bottom of those ranges to tell you you're moving in the right direction. Don't let activity be confused with productivity. It's a very bad habit, and we do have it a lot. Let's take a look at the YM. Also, very big opening range. Low end of the opening range, 42,096. High end of the opening range, 42,450. So almost a 450 point move, right? Well, closer to a 350 point move. So there we are. Look what happened, right? Let's go to the highest volume candlestick of Friday. Look where we touched. We went to the low of that high volume candlestick and reversed. What is this trade action looking like? What is trend? Well, could be rounding. Definitely could be rounding. No clue. Looks very sideways to me, but I will say this. We've rejected the high volume candle, and so I expect we move to the 50% marker in this range. All right, so let's try and find an opening candle formation that is close to that. Nope. Yeah, so the low, no, that's not it either. That's a 2-hour marker. Let's use this one. June the 15th. That's about the halfway marker of this opening range, comes into this area. I believe that the Dow is on a little bit of a downward motion event, so I would be looking for a collapse of price here at 42,351. You could take it long because you're above the 63. But if you take it long and it bounces and fails to get higher, you've got yourself another short. Me, I'm going to wait for the failure of this edge, watch for the bounce. If it fails with another lower high, I'm going to initiate the short and take it to the bottom of the range. I'm going to be very calculated today trading these markets. Let's take a look at micro Bitcoin. As you know, I believe this one's in a pretty solid fade. But let's take a look. Opening range. High end of the range, 101,065. Low end of the range, 98,900. So what are we looking at? You know, a couple thousand ticks. Okay? Expected move on the high end, 102,565. Expected move on the low end, 97,662. What's the trade? Well, look at the trend. The VWAP's flat, but our 8 and 20 moving averages are down. Old support became resistance right on the edge there. We're underneath the 63. Here's the kicker. Look at momentum. It's beginning to rise. So as momentum begins to rise, it tells you the traders are trying to find a floor that they can bounce off of. And we see that by low, higher low, higher low. We are above the opening range high. So my suspicion is that there is a counter trend long sitting here at about $100,610. What's the stop? Probably underneath the open of the Globex candle. And so that's about 99,600, 99,900. If you can't handle the risk, don't take the trade. Okay? Highest volume candlestick of Friday is this candle that occurred at 1 p.m. That's going to be the level that's going to act as resistance today. If it gets up into this range, it could easily expand to the top of the box. That puts that target at 103,700. Listen, counter trend trades long mean that you trade level to level and you get out. It doesn't mean hold on for the ride. Okay? Please be clear on that. Weekly expected move to the upside, 105,500. To the downside, 95,000. Let's take a look at copper. Dr. Copper. All right, look at this range. Look at the range of this chart. High volume, look at how volume has just fallen off a cliff here. What does this tell you? It tells you that they are in price consolidation. So if they're in price consolidation, the moves are going to sit inside the box. And if they break out, they will find a floor and move back up. So if you're saying, hey, I'm just going to trade the range, wait until it re-enters the range, go to the top of the range. Wait until it re-enters the range, go to the top of the range. So what this tells you clearly is that, hang on a second, I'm getting stalled out here at the halfway mark. I should get to the top of the range. So wait until it gets there. If you take 2 or 3 of these, you can take half of your position off, add it back to full size if it moves here and begins to bounce again. But we should get to the top of the range. Where does this trade say get out of Dodge? Literally 4 ticks, 5 ticks underneath this area is going to expand your risk dramatically, especially if you're carrying size. So you want to be super careful. Expected move on the upside, 4.8842. Expected move on the downside, 4.6660. Here's the thing, all sideways. Very big sideways formation. Edges are going to give you maximum pressure, but the volatility is expanding. So these traders are either going to win with that volatility expansion or lose with that volatility expansion. We don't know. Our job is to pay attention to volatility expansion, and that means keep our eyeballs sitting on these lows. Right? Let's go here, and we got a dashed line. That's fine. Right? 4.71. That's expanded to the downside, and the upside has been bounded by the expected move. All right, let's go to natural gas. Did I not do this? What a knucklehead. All right, sorry. This is where you push the button and go, fast forward, fast forward, fast forward. Let's see what she's talking about at the end of the storyboard. All right, opening range. Take a look at that, gas. See this monstrosity of a move? That is way too many people short and buying to cover. Way too many people short buying to cover. So now we've got this potential move that's going to likely retrace. What are we staring down? Let's do a Fibonacci. Oh, look at that. 50% of the move, 3.800. What's momentum telling us? We're at the bottom of the range. We have to find a floor. The 8 is down, the 20 is down, the 63 is flat, but we're underneath it. They're trying to find support. Do I think it's at the 50% of the move? Yeah, I do. I'm going to be watching for price action to hold 3.80, and that's going to give me some ranges to trade. Opening range, low 3.883, high 3.949. Remember, these things move in 10,000ths of a penny. Be careful. Be careful. A lot of wonderful money to be made. They're still trying to find a floor. Let them find it and don't jump in front of the noise. Wait for the price action to give you the right setup. And right now, they're still trying to find a floor after this monstrous move to the north. Let's take a look at oil. This was the one, I had a lot of people laughing because I said, hey, I would take a short in oil. As soon as it opened, let it gap up, 30 seconds, 1 minute. As soon as it loses the high, it's a short, and then it's going to fill the gap. And that's exactly what it did. Notice, moving average, flat. Tells you how they're positioned into the motion, relatively speaking. Tighter moving averages, still serpentine. Not a lot of information there. Not a lot, except to tell you it's sideways. So take a look at this motion. Big spikes to the upside, they get sold off. Why? Because folks think that we are entering recession. The more social media and news you watch, the less well you're going to be able to trade. And I'm going to tell you, I know this from personal experience. Our mind gets clouded by things we hear, which leads us to things we think, which leads us to things we feel. And then, things go off the rails from there. Settle down, keep calm, carry on, and notice the patterns. What's showing up here in oil? Well, the weekly expected move is here at 73.18. Look at the high. 83 is what they're thinking in terms of the breadth of motion, right? So pretty wide zone, but I got to tell you, these people are sitting very largely on the wrong side of the trade. Now, big money is still short oil because they think we're going into recession. Reflexive money, who is looking for speculation, expects that the noise, geopolitical noise, is going to move price to the upside. The two of those guys are going to sit in a battleground over the next several days. Okay? My thought is deep dips, they're going to get bought. Big spikes, they're going to get sold. And in the end, we're going to be sitting in this ugly box that's got a high of about 77.80 to a low at about 69.50. Now, it's going to offend some of you that I appear to be so convicted that I don't even know how I can have such a blah, 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 blah. How can you be so certain that... Listen, I'm not certain. I'm building scenarios, and those scenarios are either going to work or they don't. If they work, my trade will be good. If they don't work, I'll get a small loss. See, that's all I care about. Either my setup works and I make the money I want to make, or my setup doesn't work and I take a small loss. I am comfortable with that. I don't need certainty. I don't. I just need a pattern that I can follow where I can manage my risk, right? And right now, this is going to be the next box they dance around in. They're coming to the top of it. Very likely they move to the bottom of it. But just as easily, we could reflexively turn around and move. So the number one storyboard, folks, is manage your risk. I know, I sound like a broken record. I'm sorry. I'm the old grandmother that goes, listen, if you run with those scissors, you'll put your eye out. So that's really all I'm focused on, right? I don't want you running with the scissors and putting your eye out. Okay, so let's take a look at gold. Opening range formation, high, 3,413, low, 3,386. That is almost right inside of the implied volatility box that the traders drew. Guess what? We're underneath it now. Look at how important the 50%, when we've got a wide range like this, look at how important that 50% line in the opening range is to tell you where your setup short might look. Now, why am I looking at a short? Because trend is down. Trend is down. VWAP is down. Yeah, but Emery, we were both the VWAP. Yeah, but still, look to the left. You're going to see boxes. Let's move this one. This one still has the highest volume of all the days. We're going to see that we came in, look at that, almost the top of the box, and then rejected. Here's the rub. We're making a higher low. Momentum is on the incline. So if you take a short here, you better take some profit. What's the profit? 3,366, right? Could it move forward and downward? Absolutely. Absolutely. Right? I see a lot of traders, as gold moves downward and starts consolidating and stopping its grand motions up, they're going to try and shift to silver. And so although we're just going to peek at it for a quick sec, we can see that silver had a really big move up, great big consolidation, right? It moved to the top of the box, broke out. Now it's moving all the way to the bottom of the box. I suspect this is where we might get some juice worth the squeeze. Am I trading it yet? I don't know. You got to be very concentrated, and my brain is currently a bowl of jello from all the travel and the, we had a lot of things go on this weekend with the wedding, and, it's just rough. Anyways, what is a SPY doing? Let's go to the SPY. Opening range, we are well under that opening range. Notice, the futures are not. The futures are above their opening range with the exception of the YM. SPY, not so much. So what are we staring down? Opening range, the high 595. Seriously? No. The high 596.41. The low $595.27. Okay, so we're looking at about, $1.20. Top of the range fails. Top of the range fails. Also holding the floor of Friday. So we've got to stare that down. Are we sitting in a new range between $592.87 and $596.50? What's the trend? Well, we're obviously calling the range, but the trend right now is bounces or sell zones. Tight moving averages also down. The big moving average that really tells the tale, definitely down. Formation, high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, holding the low. That's the first action event that shows a shift in the order of the formation. So below $592.80, shorting action. Above $592, $593, long action, but only into resistance, which is about $597. Let's take a look at the Qs. Golly, my allergies are just abysmal. Okay. Here we go. Opening range for the Qs. $528.52 on the high end, $527.05 on the low end. So we got about what? About 50, right? Could not hold the top of the opening range, fell to the floor. Take a look. Trying to hold the floor of support. Bouncing into the opening range, can't close a candle above the 50%. Watch for that. 527.80, 527.20, 70 closes above there. You're going to see upside pressure. Where's momentum? Abysmally low. They're trying to lift off the ground, but this tells me bounces or sell zones. If you want to take a counter trend long, wait for the bottoming formation to hold by testing the floor and then recovering. You don't buy it on the way down. You buy it on the way up. That's important. All right, everybody. I know I had a diatribe this morning. My apologies. I'll put the speed up at like 1.8 so you don't get... And then just, fast forward. You can easily go, hey, I do not buy what you're selling here. I believe XYZ about what's going to happen. I honor that. Here's what I'd like for you to do. Manage your risk. And know that when you're wrong, and you're wrong more than 3 times, pretend you're somebody at the baseball, at the plate, right? You got 3 chances, you're out, step back, time to go to the dugout and review the film, okay? Take care, everybody. I'll see you on the streams.